Welcome to the Travelex Weekly Outlook. The dollar starts the week of September 13th broadly on the defensive. That's as higher stocks and positive risk sentiment have encouraged investors to leave the safe haven of the U.S. currency. So right now, to give you an idea, the dollar is at a one-week low against the euro. It's at a 5-month low against the Aussie dollar, and at its lowest level in 3.5 weeks against the Canadian currency. As I mentioned, we have seen safe haven currencies come under pressure. That's as brightening prospects for the global economy have triggered a rally in some of those higher yielding currencies. In fact, to start the week of September 13th, we did see investors largely breathe a sigh of relief after a weekend meeting of world finance leaders showed that there will be less stringent plans for banks across the globe to bolster capital. And what that has done is lift stock sentiment across the globe, and that has fueled a rally in higher yielding currencies. The buck's broad-based decline really took root the previous week. That's when we saw some positive data from around the world. That boosted confidence in the outlook for the global economy that had been pressured in recent weeks. We did see U.S. weekly unemployment claims. That dipped to a 2-month low in the latest week, while we did see encouraging data or employment data out of Australia and Canada. And so that also added to the rally in riskier assets, and that had put broad pressure on the U.S. currency. That helped to ease concerns about the U.S. economy tipping back into recession. And as a result, that has lifted investor sentiment and boosted demand for some of those higher yielding currencies. Keep in mind, though, that the dollar tends to perform its best when investors feel less certain about the outlook for the global economy. That tends to spur demand for higher yielding or safe haven currencies. The global growth outlook, although we have seen the euro start out a bit weaker against the U.S. currency this week, the euro did largely sit out the rally in risky currencies that we had seen last week, and that was on renewed concerns about Europe's debt crisis. There was a report last week that showed that some of the banks that were involved with Europe's stress tests back over the summer, some of those banks apparently minimized their true exposure of some of the risky sovereign debt of nations like Greece and Spain. So as a result, despite the euro's broad rise to start the week of September 13th, its upside could be more restrained given those lingering concerns about Europe's debt crisis. To really determine whether or not this latest rally in risky assets will continue throughout the middle portion of September, investors will really hone in on some key U.S. data this week. That's when we'll get reports on retail sales. We'll also get inflation at the wholesale level and the consumer level. Those type of indicators should really shed light on the pace of the U.S. recovery. Any type of positive data would further ease concerns about a slowing U.S. economy and perhaps spur demand for higher yielding currencies like the euro, the Canadian dollar, and the Aussie dollar. That would tend to put pressure on the U.S. currency. But that's where we stand for now. That'll do it for this week. For the latest on the dollar and the foreign exchange market, please have a look online.